Greetings, greetings, greetings to everyone who is tuning in to our first episode of Realtor Tip Tuesday with the Hennigans. Yay! Today we have a special guest for you guys. We have one of our go-to lenders, Felicia Rhodes with AmCap Realty. We're going to be bringing her on in just a moment, and she's going to be here to talk about the single-family new construction program, and she'll get all into that. But as usual, I always like to come in and introduce ourselves. So who are you, sir?
And for those who don't know, might be new to us, I am Roland Hennigan, the other half of Hennigan Realty Group. I appreciate you guys tuning in now, or even if you're watching it later. It's going to be a bunch of great information here, and this is not going to be the last time we do it. So you guys need to like our page and be on the lookout for all these home buying gems that are coming your way.
Yes, ditto. And if you guys don't know who I am, I'm the other half of Hennigan Realty. I'm Dana Hennigan. And yes, just like Roland said, make sure that you guys are tuning in. We're going to be doing this once a month, and then we'll also record these so you can always come back. But make sure you like and follow our pages so that you can get those alerts when we come back. And with no further ado, we're going to bring up our guest, Felicia Rhodes. Felicia, welcome. Hello.
How are you?
What's going on, Felicia?
Hey, I'm just here making it in this business. Trying to be available. That's it.
You're doing that.
Yeah.
Yes, we are so appreciative that you are able to be available, and always available too to our clients on a consistent basis. So thank you for that.
Thank you. I am excited to be here to talk about this new program for our buyers that are in the market for homes, who need down payment assistance and want an affordable new home.
Yes, and I'm excited about this too because as we know, with this market going up, the prices of homes are consistently going up and up and up. And then we have people who can't afford homes, and especially not afford a new home because of they've been priced out of the market. But thankfully we have, is it City of Houston or Harris County? City of Houston?
This one is Harris County.
Harris County. Okay, so Harris County has
today is Harris County. City of Houston will be another day.
Yes. So today is Harris County, which is it just rolled out April 1st. So single family new construction, where you can come in with a minimum amount of income and get a brand new built house. So tell us about this. What is this?
So
I'm sorry, go ahead.
No, you good. Let me just say this. Like you said, today is Harris County. The next day or the next time it's going to be Houston. That just lets you guys know there's a plethora of resources out here that you may not know about. So don't just automatically say, I don't have any money, I don't have this, I don't have that. No, come to Hennigan Realty Group and let us know your home buying aspirations. There's all kind of resources out here that we can tell you about that you may not be aware of, because a lot of realtors and lenders aren't telling you these things. Maybe it's too much work for them. I'm not trying to throw anybody on the bus, but what I'm saying is we specialize in telling you things that you may otherwise not know. So just check us out and get all this information that we're throwing at you.
Yes.
Right.
Ditto.
I mean, there is a lot of paperwork on our end to do, but hey, I'm here willing to do it. I represent, people, hard-working people who make an honest living at a moderate income that want to be able to afford a home. My motto is, if you want to be homeowner, if I tell you how to do it and you do it, then you will be a homeowner.
Yes. And we definitely can attest from that. We work with Felicia, and if she tells you to do something, I tell my clients all the time. They come to me about lending questions. Let's talk to the lender, because I don't want to do anything as the realtor to mess up the transaction for, the client and on the lending end of it. So yes, if you do exactly what, Felicia tells you to do, then she's going to make sure that she gets you into that house. So let's go ahead.
The first step is, if you want to become a homeowner, you need to get with any lender, whether it's me. Of course, I would love it to be me, but just with any lender, you need to get with any lender, look at your credit, see what steps you have to take to become in your, to be in that limelight to purchase a home. Okay. You have to sit down and speak with the lender, go over your credit, see what you can get taken off, or see what you need to do, see what you need to pay down. Do you need to go into credit repair? You have to start there first.
Right.
And then you have to know your buying power. So you have to know, what your debt to income ratio is, how much money you have to make to maybe afford the house that you want. With our market changing so drastically in the last few months, people can't buy a house. You don't see many houses out there for 175 and 180 and 190. They out there, but you also have to have the mindset that it might be a fixer-upper.
Right.
Right.
So it's better to get with a lender so that you know what your buying power is, income versus debts.
Right. So you bring up a lot of great points, which again, with this program, with the single family new construction program, it kind of helps with some of the debt to income ratio. So let's jump into that. How much are these homes with this program?
Well, what is the program? How about that? What is the program about?
So the single family new construction program is a program that Harris County has rolled out to make to build affordable homes. They have partnered with several different builders, developers to create these homes. They have certain subdivisions that they will be building homes in. They'll probably be building 3 to 20 homes in certain areas. So, as you all know, I deal a lot with Harris County down payment assistance just generally. This program also incorporates Harris County down payment assistance funds for buyers who need the down payment assistance. But they go a step further as far as in helping the buyers be able to meet the debt to income ratio qualifications. If I have a buyer that's at a 45% debt to income ratio and we're off by $10,000, single family new construction will give them an extra price reduction assistance so that they can meet the 42% back-end ratio. So they will discount that house up to 45%.
I got it.
Yes. So real quick before you ask that question, so you mean that they are lowering the prices of homes so that people can purchase homes? Is that what you're saying?
Yes.
Okay.
So I anticipate that we have a lot of first-time home buyers that's going to be tuning in and watching this. So can you just explain what debt to income ratio is really quick?
So the debt to income ratio is basically your estimated mortgage payment plus the monthly debts that you pay each month. That's according to your credit report, not according to the person, but according to the credit report.
Okay.
And you take that amount and you divide your monthly income by that.
Okay.
And so that's where we get your debt to income ratio from.
Okay. So the lower the DTI, the better.
The lower the DTI, the better.
Okay. Is there anything that people can do to lower their debt to income ratio on their own?
That's on a case-by-case basis.
Okay.
If you have 20 credit cards, make them down to $10 balance. I don't ever tell anybody to pay their credit cards off because we still want that credit to be generated. And so I always tell people, leave your credit cards at about a $10 balance. But keeping your car payments low.
Okay.
If you only make $3,500 a month and you got a $700 car payment, you really only have about $2,000 something to play with.
Got it.
$2,700 to play with.
Got it.
So it's basically just monitoring what monthly payments you pay out each month.
Okay, got it.
Okay. So Felicia, with this program, I know you said that It is with City of Houston. I keep saying City of Houston. It is with Harris County.
Harris County, yes.
So does that mean that I can only purchase, or our clients can only purchase homes in Harris County?
You can only purchase homes in the desired, in the, what's the word I'm looking for, in the selected subdivisions.
Okay.
Okay.
Like they have, you know, Katy Crossing. They have Ella and FM 1960, where they're going to be doing some homes. Kinswick, Connorville, you know, those subdivisions. There are about 12 subdivisions that they're working with, where they're going to be building homes at, and you can only purchase within that subdivision.
Do they have any on the south side, or any of those locations on the south side that you know of?
Y'all know I'm not direction fluent.
Well, we'll do this.
Third Ward, Southeast, South
we'll
Ward,
put the
Southwest.
We'll put the names of the subdivisions
Okay,
later.
Yeah, Gaston.
Yeah, so people can look it up and they can know. For those who are more directionally able.
Yeah, I'm not, but I do know Gaston is off 610 and Wayside.
Okay.
Yeah.
Okay.
Yeah.
All right. So we have Nicole Black wants to know if there are any homes in the Richmond-Rosenberg area for this. And so I can go ahead and say no, just because it's with the city of Houston, so it has to be city of Houston, meaning that they're paying taxes towards the city of Houston. So Rosenberg, Richmond area would be considered Fort Bend, and a little bit of Lamar. Lamar consolidated. So for that one, it would be a no. But Nicole, we do have programs. We do have some programs. So go ahead and make sure that you know catch up with us, and we can tell you about some down payment assistance programs in those areas.
I do have down payment assistance programs for the Fort Bend area.
Okay, so keep listening, Nicole.
Right,
you know,
right. Good question.
Good question.
You miss 100% of what you never asked. So there it is.
Exactly. Okay. So how do we? So I say I'm okay with going with in the city of Houston, and I looked at the list that that's up there, and I want to go ahead and apply. What should I do first? Should I contact you, or should I contact single family new construction program?
Now, you know what they say, the Harris County Single Family New Construction Program representatives, Kevin and Miss Garrett, they say contact them first. I say contact your lender first to make sure you qualify, because all they're going to do is do an income certification. They're going to look at your income documents and make sure you are within the guidelines of the income. And then they're going to say, okay, you're income certified. But then when you come to a lender and you don't even qualify for a mortgage, I think that is setting a person up to be disappointed.
Yeah, that makes a lot of sense. I'm glad you pointed that out.
Now with me, what I have done is I know all the documents that they are going to ask for. So what I do with my buyers, and y'all know I'm hands-on, I will gather their documents that they're looking at, and I will send it over to the representative once I qualify them for a mortgage and say, hey, this buyer qualifies for a mortgage. I want to see if they qualify for your program.
Okay. So just to recap real quick, I'm sorry, before you ask your question, I just want to recap for our listeners. So I see this program. I want to find out about it. The first thing I need to do is I need to contact Felicia so that she can go in and qualify me for a mortgage. So she says, yes, I'm qualified for, let's just say $215,000. And then from there, you're going to get all the documentations that Kevin and Ms. Garrett are going to ask for. The single family new construction program are going to ask for. And then you're going to submit everything over to them.
Yes.
Okay.
So speaking of documents, what kind of documents can we expect that will be needed?
Basically, the documents that you would send to your lender, like 2-year W-2s, 2-year tax returns, 2 months bank statements, driver's license, social, You will need the social of the dependents. You will need the birth certificates of the dependents, because this all falls in line with the documents that are going to be needed for the Harris County down payment assistance that's going to assist them with the $35,000.
Okay, so then they're going to need the, I think it's the home buyer's educational course.
They will need the home buyer's educational course. At that time, once they qualify, what I do is send them the link for the program, for the down payment assistance program that they can take.
Okay,
that's good. I had a question and I just lost my question just that quick. Okay, that's what one of my questions was. So let's say the house is, because I saw a house on there that was like for $250,000, but you only qualified, me for $215,000. Does that mean that I cannot purchase that home?
Now, I do have to get a little bit more detail from the representatives, but from my understanding, they can qualify up to 45%, like a principal reduction on that home, as long as they are under the 42% DTI.
Okay, so break that down. So you talk about the 45% principal amount, and the DTI. You did talk about DTI, what that was earlier. But what does that mean for those who are like, what does that mean for 45% principal reduction?
So if we need $20,000 to get them to the 42% back in ratio, from my understanding from them, they would take the appraisal amount times 45%, or the purchase price times 45%, and use that to make them qualify, for the program.
Okay,
that's pretty good. Well, can you combine this with any other down payment assistance program like TSAC or anything like that?
No, you cannot.
Okay.
Because they're giving so much, you can't combine it with TSAC, TDHCA, SETH. You can't combine it with anything.
Okay.
Just because you're getting it from Harris County, and of course, Harris County don't the regular program. You can't combine it with anything. So.
Okay. And how much are they giving towards down payment?
$35,000.
Wow.
They're giving $35,000.
Mm-hmm.
So if the $35,000 isn't needed for the property that they're trying to buy or purchase, can some of that be transferred into closing costs, rolled over into closing costs, or something like that?
Well, how I do it, the $35,000 will be down payment and closing costs.
Oh, okay, good.
So I can probably come to, or I'm speaking as if I'm a buyer. If I'm a buyer, I can come to you $35,000, and if you're doing it for the down payment and towards closing costs, I mean, am I really bringing anything to the table with this?
Anytime I use Harris County, I always zero my clients out.
Okay.
Well, except earnest money, right?
Except the upfront costs. Many people think, zero down means they don't have to bring any money to the table, but you have to have your upfront costs. You have to have your earnest money, your appraisal fee, and your inspection. Right. And then I always tell buyers to have some money saved on the side for reserves. And reserves is just, if you lose your job or anything, you can show the bank that you have at least a couple of months saved already to continue to make your mortgage payment until you find another job.
Okay.
Because life happens. You never know.
Right. And then with this program, I don't want to misquote, but I want to say that when I spoke with Kevin, there is something that that's unique about their inspection process, because if their new build, where they go and they do their inspection process, or kind of like the same way a new build would go about it.
Well, these homes are built by Harris County, so they're already going to pass their inspections. They're going to make sure that their properties meet their inspection guidelines. It's not like if you take them to a new build for another builder, they have never inspected the property. these homes that they have certain guidelines that they have to meet the qualification of the home. And so their inspector is those builders are gonna make sure that it passes their inspections.
Yes.
Yeah, and for those of you who are just tuning in, we are talking about the single family new construction, new build home, where Harris County is making homes affordable for people who otherwise might not be able to afford a home in this market. So if you're just tuning in, just want to give you a recap as to what we're talking about, and make sure that you go back and watch this from the beginning, because Miss Felicia has dropped a lot of gems and given us all some news and we can use.
Yeah. And there are income limits to it, and by me working with Harris County personally for a long time, I know how to calculate that income up front to make sure that you qualify for it. What else was I going to say? Your mortgage payment will include your principal and interest, your taxes, your homeowner's insurance. Your HO fees will be calculated in there, but of course you pay your HO fees at the beginning of the year. So, when people think, oh, I only want my mortgage payment to be $1,200. Okay, well, your mortgage payment can be $1,200, but you also have to factor in the taxes and insurance in there. So I would just want people to be realistic about mortgage payments.
Right. I'm glad you stated that. And so you made mention of that there are income limits with this. Do you have that information to share, like in regards to the income limits as it pertains to the household sizes?
For a household size of 1, it's about $44,350 annually. And 2, it's about $50,700. For 3 people, it's $57,050. But anybody who's interested, I have a packet for them that would outline all this information. But these types of programs would require you to really be sitting down and talking to somebody so you know what you're in for. Because you might think you make $50,000, but when you count in overtime, because that's what they count in, overtime, any recurring debt, money that you have, if mama give you $200 every month, they gonna count that as income. So even though you say $50,700, you have to take in that might be your base, but you have to take in the overtime, the PTO, all of that you make on your paycheck, bonuses, all of that. And so it's just best to have your income calculated correctly the way Harris County will calculate.
Yeah. And let me say too, to any of the listeners, don't count yourself out thinking, even though, Felicia said those numbers, don't count yourself out, because sometimes we're thinking about, our income in a certain way. And we're thinking about, just like how she said, we're thinking about it in the way of what I see coming in to on my check.
Right.
And with the lender and with these different programs, they look at it a little bit different, good or bad. And if you do make a little bit too much, there are other programs out there too. So again, don't get discouraged and think, okay, well, I can't do this program. This is only one program. We offer various programs. We work with, lenders like Miss Felicia, who offers various programs that fits different price, income brackets. So, call first and that's why we bring these types of things to you guys, because we want you to be educated. So whatever decision you make, whether you decide to buy now or buy later, make it an educated decision. Like, I'm buying now, buying later because of XYZ, not because I feel like I can't afford a home. Don't base it on feelings, base it on facts. So that's how we move at Hennigan Realty. We base it on facts, not feelings. Not saying we don't care about your feelings, but we want you to be informed.
Right.
And also, if you want to become a homeowner with this program, they have homes that won't be available and completed till next year, 2023. Wow. So you have time. So it's best to get in. Let's look at your credit and let's set up you a credit plan. We also have credit repair companies that we partner with that will get you to the score that you need to be in order to qualify. You know, to me, I tell people, you know, if you don't want to do the work, you're not going to be a homeowner. But if you're willing to do the work and your heart is set on being a homeowner, then I say try it.
Right.
One thing about me, I don't ever tell anybody no. I tell them not right now.
Right.
But I don't ever tell them no.
So let me ask you this. We were just talking about income. So what about my entrepreneurs who don't have a W-2?
So with your self-employed income buyers, you still have income.
Right.
But we calculate it off of your tax returns.
Okay.
And I always tell buyers, if you're self-employed, you know, give me your tax returns. Let me look at them. Let me calculate them the way a lender would calculate them.
Okay.
Now, if you're looking at your Schedule C and you have a negative each year, then still sit down with me and I can advise you what type of income you will need to make in order to qualify.
Okay. Got it.
So I can still do this program even if I am a 1099 or an entrepreneur?
Yes, ma'am.
Okay.
But you can't, I'm quite sure that you can't file losses every year after year after year, because that's probably going to come get you. Is that right?
You know, that's right. And that's with any program, not even this program. If you just want to be a homeowner and you're self-employed, then you have to show some income.
Yeah.
You have to show some income. You can't just write off everything. You have to show some income.
So keep that in mind, our entrepreneurs that's out there. You know, if you are considering purchasing a home, getting with your tax person to make sure they're filing your taxes so that you don't have all those losses on them. Because you may be bringing in $100,000, $200,000 a year, but if it's showing that you have a loss of, I'm bringing in 200, but I'm showing a loss of 150, what it's really saying is I only make $50,000 a year. So keeping that in mind for the next 2 years, and you need to show 2 years of a 1099. Is that correct?
Yes, you need to show some positive income. If you made 60, don't write off 50.
Right.
I know it feels good right then and there, but if you're trying to buy a house.
Yeah, you gotta show it. That's it. Yep, you gotta show it. You know, even if you have to pay some taxes, set up some payment plans on it, you know, but, you know, many times, you know, we're self-employed ourselves. Many times we just go in and write everything off. But, you know, when we're trying to set goals for ourselves, buy a car, start a business, own a house, you have to show some income.
Right. So I make the income. I'm okay with the area. I'm in that price range. What about my credit score? What does my credit score have to be for this particular program?
Minimum credit, what they say is minimum credit score is whatever the lender's guideline is.
Okay.
And FHA guidelines is 580 minimum credit score.
Okay.
So I just need a 580 FICO credit score.
A 580, yes. FICO 5, 4, and 2 is what lenders use, not FICO 8.
Okay.
So what's the difference?
When you're looking at Credit Karma, that's a FICO 8. That's only a credit card rating. You have several different ratings: credit card rating, mortgage rating, and auto rating. The best website to get your mortgage score is going to be myfico.com. You have to pay for a subscription, but that's the best way to see what a lender is going to pull when they are pulling your credit report. Because you might see on Credit Karma you at a 640, and then when a lender pulls it, you're at a 600.
Yeah, and we do, you know, unfortunately, but fortunately, you know, fortunately the people are looking at their credit scores, but unfortunately, you know, it's that false hope with Credit Karma. But Credit Karma is a good source, I will say, and correct me if I'm wrong, but I will say that Credit Karma is a good source for monitoring your credit, like of knowing what is on your credit, but not necessarily that credit score to say that this is my credit score, I'm ready to go buy a house.
Well, it could be in certain ways, but I beg to differ on Credit Karma because it only shows 2 bureaus, and we have to look at them.
Good point. That's why I say correct me if I'm wrong.
You may look at those 2 and then think there's not anything on that third one, and there is. It doesn't cost us to pull your credit if you apply. So I just say, if you're really serious, if you know your credit score is maybe 560, 580 and just needs a little work, then apply.
And let me just add to that point too. Let's just say your credit score is like at about a 570 and I need to be to a 580. I go ahead and apply. And just like you said, there are some homes that are being built. Yeah. So we still have time. So and it takes it's a process too in order to get all these documents in, and for your approval is quick. But when they go to the city, it takes a little bit of time. Kevin is pretty fast, but still it takes time. But during that time span, I could be doing whatever Felicia's telling me to do to get my credit score up to where it needs to be. So that once they say, yes, John Doe, you are ready to go and look at that house, then, my credit score is where it needs to be.
Right. Because you may work on your credit, not just for this program, but for other DPA programs that we have. I don't just put you in one program. I qualify you for them all, and then you can choose which one you want to go with.
Good point.
Yeah, for those that are tuning in late, once again, this is the single family new construction program by Harris County. They're making homes affordable in this beast of a market. So if you're just tuning in, make sure that you go back to the beginning and you watch from the beginning so you can get all of this good information that was put out there, and look forward for us to do this with different programs and different information once a month. Just go to Hennigan Realty, like our page, keep up with our posts, and we're going to bring it to you.
Yes. Something I also want to highlight with this program, the single family new construction program, is once they qualify you. So one of the biggest things that, I hear from clients, I'm qualified, I found a house, we go out there, go looking for houses. And what happens? I go to an open house. Felicia and I, we did an open house, and I had to stop it at 42 offers. 42 offers. That's intimidating. If I only have $225,000 to play around. Even at $250,000, it's intimidating. But with this program, once you get qualified and you go in to find a house, it's first come, first serve. So you are not having to haggle with, a seller or who has the most money and all that stuff or whatever. It's whoever gets approved first. So you come in, you take care of your business, you do exactly what Felicia tells you to do. You give those documents, then they approve you. We go looking for a house that's already there or getting ready to be built. And at that particular time, we put in an offer, and that's your house.
Yes.
Yeah.
So once you gather all the documents together and you send them over, and the single family new construction program representative reviews the documents, they'll send an email back and state that you have been income certified. And then at that time, you as the agent would take them to go view the house, and then you will call if they're interested. The representative draw up the contract, and you are in contract.
Yes. And I can say, don't be mad at me, Felicia. Like, you did tell me to tell you when I was going, but I think you was on your way to Dallas. But I did go and look at a house.
Okay.
I did go and look at one of the houses with a client, and they're nicely built homes. It was, I don't think they had no carpet on the bottom floor. They had granite countertops. They had a very nice size walk-in pantry. They had Whirlpool stainless steel appliances. It was that nice dark wood for the cabinets, and the granite countertops for the bathroom counters. They had a nice sized backyard. And I want to say, did it have like a little covered patio? I'm not sure. Don't quote me on that one, but I want to say it did. But it was not half done. It was nicely constructed for, it was this house was 3 bedrooms, 2.5 baths. All the bedrooms were upstairs, and then there was a half bath that was downstairs. So I can say from personal experience of actually walking into the home, laying eyes on the home, that it was a very nicely constructed home.
So these homes will probably be good for starter homes with people, who want to get into home ownership. We all know that, young couples who are purchasing homes, they're not going to be in that home. If this is your first home, you're probably guaranteed, if you're not over 50, you're probably guaranteed to buy another house.
Mm-hmm.
So I say get you a new constructed new home that's doable for 5 years, 5 to 10 years, and then prepare yourself for your forever home. Your first home is never your forever home, to me.
Right.
You outgrow it, your family outgrow it, you outgrow the area, and then you want something different.
Yep. And I probably know what you're going to say, but go ahead and say it, because you're probably going to say the same thing I am.
We're going to see. And the way these homes are appreciating, you're probably going to want to act on that now, because like Felicia said, when you get your second home, you will have so much equity already in your first home. It will make the price, it'll be easier to get your second home because you'll have a whole lot more money to play with. Now let's see how well you know me.
So I was not going to say exactly that, but what I had to say, it played on that, which is because you have equity in your house, what we've been telling our clients is not to go and sell that first house that you have.
Yeah, absolutely.
You keep that house and you pull the equity out to, go into a second house. That's a whole nother episode for us to come back on that one and dive into that one.
You can do what you want to do, but we're firm believers of that. But like she said, that's a whole nother episode, and I like to talk about that one.
Yeah. Like, do not sell your house. How you can get into real estate, you can have multiple homes by just purchasing the first house. And I know that a lot of people are like, no, I don't want to buy a house right now. It's not a good time because the prices are going up. No, what's going up is equity. Equity is going up. The value of your home is going up. So you better hurry up and lock that value in right now.
And the prices aren't necessarily going down. I mean, we don't predict the future, but the way the trend is going, hey, Texas can be the new California. So you need to act.
Act now. So time is winding down. So before we close it out, Felicia, we're going to hand it over to you. Tell us whatever information that you want us to know about the single family new construction program or any other programs you have. And then make sure that we have your information. I'm going to put your information back underneath here. But how can we get, who are you? What do you have? Why should we do the single family construction? And how can we get in contact with you?
Well, you can always reach me by cell, 832-610-9227. For quicker responses, sometimes you need to email me, frodes@myamcap.com. I am a loan originator with AmCap Home Loans. I've been in the business since 1998. I strongly got in the business to help my hardworking individual buyers and my first-time home buyers that people don't tell them how to get into homes. The single family new construction program is just another step up from the Harris County Down Payment Assistance Program, just to allow buyers to be able to get a brand new home at an affordable price. I get a lot of single families, single moms, single dads that want to use this program. And this will be a good step up because you can get a new home. Everybody wants a new home. So you can get a new home and be comfortable in a new home rather than, especially like with our single family moms, they don't want to do a lot of repairs, where this is a new home. And you can at least get a few years out of it without doing any repairs. To use this program, it will eliminate your down payment and your closing costs because you wouldn't have to come up with that out of pocket. So those of you who don't have a lot saved, you can still become a homeowner and have everything covered for you. I think the city of Houston, the Harris County down payment assistance programs, Montgomery County down payment assistance programs, all of the city and the county programs always helps your buyers because there's enough money there to cover down payment and closing costs. The TSAC, the SETH programs, your buyers still have to come to the table with most of their closing costs, you know. So ones who don't have it, this would be an opportunity to be a homeowner and to basically walk into the house with zero down.
Yeah, and as we had a listener in Nicole Black, she said she was the one who asked about Richmond and the Rosenberg area, and after listening to all this, she said she might have to move to Harris County. So, it's good programs out there with a lot of money. You may just have to reconsider your area.
You know, in this day and age, you know, of course, Ms. Dana, we've had a few clients that have had to reconsider which area they want to live in. Oh, I want to live here, but you want to be a homeowner, but the money is over here, you know, for you to get in, and the housing is over here for you to get in, you know. So, you know, it's just best to think about and reevaluate your thinking on where you want to be, you know, for 5 to 10 years, you know, and that's where sitting down with a real estate company like Hennigan Realty Group, and then sitting down with a lender like myself, and that way it'll give you the options, you know, that you can think about, and you can choose which way you want to go. I do consultations for free. You know, we can either do it Zoom, by phone, or in person, you know, but I really suggest that everybody go and talk to a lender and then come back to the Hennigan Realty Group, you know, to go out searching for a home. It only takes about 35 minutes, you know, or within 35 to 24 hours to get qualified.
All right. Well, I think that was well said. You guys can see definitely with all the information that Felicia brought to us. And so that's Felicia Rhodes with AmCap Felicia Rhodes with AmCap Home Loans. And her number is down at the bottom, 832-610-9227. Or you can reach her through email at frhodes, that's RHODES, at myamcap.com if you have any lending questions. But again, that's the reason why we paired with lenders such as herself, because we also at Hennigan Realty, we believe in assisting the underserved and the overlooked. We want to make sure that we help all buyers. No, we're not turning down people who want to buy million dollar homes, but our heart and our passion definitely is in helping the hardworking families who sometimes just think they could not own a home. And that gives us so much pleasure and so much pride to be able to walk you through the process, to not just be able to own one home, but like we said, and we'll come back with another episode on that, how you can take that one home and you can then own multiple homes. So with that being said, I'm going to hand it over to Roland to close us out. And thank you so much, Felicia, for joining us today and just dropping so many gems and so much information for our first episode of Realtor Tip Tuesday with the Hennigans.
All right. Well, we appreciate you guys. We appreciate y'all for tuning in. Like I said, you can look forward to this once a month on a Tuesday, and just go to our Facebook page, Hennigan Realty, for further information. And also, I just want to throw in there that we're still doing a home buyers workshop. So, and that's happening every third Saturday at the Shape Center in 3rd Ward from 12 to 2. So you still can come and talk to us in person. You can talk to our lenders, our credit people. We're still doing that, okay? That is not over with. We've been doing it for a while now, and we're going to continue. So without any further ado, thank you guys. And I can't stress enough, go to Hennigan Realty page and like it so you can keep up with everything that we're doing.
Like and follow. Don't just like us, like and follow.
That's what she there for, to get me right when I'm not right.
It's a team, the Hennigan Realty Group. Yes.
There it is.
So thank you guys so much for joining us. Thank you, Felicia, again. And we will see you guys soon on the internet or in face-to-face.